Is this the right time to sell? In stock markets, one of the toughest questions to find answer to is to figure out when is the right time to sell. We've all been there. You decide to sell a stock, the market immediately goes up. You decide to hold on to a stock, the market continues to fall, bleeding more losses for you. For example, the markets has fallen quite a bit in the recent past. So what do we actually do? How do we decide whether to sell a stock or to hold on to it? Is there a framework for this? In this video, I'll give you a method that will help you make a decision. Let me share a story. It was September 2007 and I decided to buy ONGC. By fluke, I had perfectly timed the bottom in the stock. Right after I bought, the stock started to rally. In a matter of few months, I was actually sitting on a profit in excess of 75%. Till date, I remember this day. It was 2nd Jan 2008. A good friend of mine who was also a trader asked me to book profits. But then, the recent rally had induced a great amount of greed in me and I decided to hold on to the stock. And as you would have expected, the stock started to decline after I decided to hold on to it. The fall in the stock accelerated by the day and eventually my 75% notional gain soon turned into an actual loss of 10%. I'm fairly certain, as a trader or an investor, even you would have experienced something similar. We all do. Market falls can evoke intense emotions in any investor, mostly fear. In hindsight, whenever you evaluate decisions made under extreme pressure, or fear, or greed, you'll often realize that they are the wrong decisions. This includes decision to book profits in a market downturn. Given this, let me try to give you a framework which you can use to figure when to book profits given any situation in the market. The first and the easiest way to build this framework is to identify your market persona. A market persona is defined by your frequent activity in the stock markets. For example, you could be a trader who buys stocks today and holds on to that stock for a few days, maybe a few weeks or a few months. In this case, your persona is that of an equity positional trader, also called as a swing trader. Or let's take another example. You could be a person who will initiate a trade at the start of the day and wind up before the market closes. Clearly, the market persona of this person is that of a day trader. So the profit booking framework differs from one persona to another persona. What works for one will not work for another. So let's take different personas. I'm sure you would fall under one of these categories and then figure out what should be the line of thinking while booking profits. Let me start with the simplest persona, that of a mutual fund investor making regular investments through SIPs. Firstly, I don't understand why SIP investors get worked up when markets correct. The underlying assumption for a SIP investor is that you don't really know how to time the market, and that's okay. And therefore, you make investments regularly through averaging. So if you're an SIP investor, be very clear, timing the market is not something you should be worried about. Continue making your SIPs till you achieve your financial goals and don't think about profit booking. As an extension of an SIP investor, the next persona is that of an equity long-term investor. This is a person who will buy a stock and hold on to the stock for a very long time. Now, the underlying assumption here is that when you buy a stock, there is a thesis backing your investment decision. And the thesis can be anything. It could be strong ROE of a company. It could be a strong PAT margin of a company. It could be strong business moat, great management, or it could even be great balance sheet strength of the company. And you, as a long-term equity investor, are expected to hold on to the stock till your thesis holds. You book profit only when this thesis starts to break. For example, if you built your investment thesis around PAT margins, and if you start to notice that the PAT margins are declining, then you have a case to book profits, and not simply because the markets are correcting in the short term. Now, the third persona that I would like to talk about is that of an equity positional trader. Now, this is a person who buys a stock, holds on to it for a few days, few weeks, or even few months. Like I mentioned earlier, they're also called swing traders. In most cases, a swing trader would have bought into a position either because of a chart pattern, or because of momentum, or because of any expected news in the stock. Please be very clear, these are trading positions and your P&L is very sensitive to price movements. If you see market corrections, then you need to be quick to act, review your stop loss, and take a call on whether you need to book profits or not. And in most cases, the decision is often to book profits. The next persona that I would like to talk about is positional derivatives trader. These are people who trade derivative products like futures and options and hold these positions for a day, couple of days, or maybe few weeks. Again, these are swing traders, but they trade on derivatives as opposed to stocks. Their outlook to book profits is similar to equity positional traders, but quicker. Remember, derivatives are leveraged products. Therefore, you need to be doubly sure at the time of initiating a position. For example, if you've initiated a futures position because there is momentum in stock, then you need to be quick to understand when the momentum is slowing down. And this can be easily measured by simple indicators like moving averages. And if you see any change in momentum, be quick to book your profits. The last persona is that of a day trader. These are people who initiate trade during the day and end up closing their position before the market closes. So there is no question of when to book profits here, because as a day trader, you're bound by the design of your trade and you're expected to book a profit or a loss before the day ends. As a day trader, the only thing you need to remember is not to do anything silly which makes you change your mind from being a day trader to a positional trader. I hope you found this video useful. I'm very curious to know what your market persona is. Do comment below and let us know what your strategy is to book profits. I'll see you in the next one.